Good morning, folks. Hope everybody's doing well. Hope everybody had a great day yesterday and a good night sleeping. Wanted to take a look at a little review on how the week has gone. We had our Monday rejection of trend line and fall back to test our previous zone. We picked up off of that zone yesterday, ripped right back to engulf Monday, and make it to our next zone and the next trend lines. Just to get an idea of these trend lines, we clearly have a trend line from the two highs of this year that's still way above at 4,400. Then we talk about the next trend line that started from the highs of March and April. If we zoom in a little, that trend line from March and April is something that we broke through yesterday. Then we ran into the trend line from the last time we reverted to the mean and consolidated before the next sell-off. So we made it through the bigger picture trend line, rejected a kind of smaller picture trend line, and now we're coming back to test the bigger picture trend line, right? One thing I'll also kind of point out, we hit our zone, setting a low of week down at 38.20. We hit our next zone and set a high of week. We could stay between these zones for the rest of the week, or we could get above and continue higher, right? Obviously we can break back down, but I think it's going to be back to this zone. So in between two key zones, had a great run up, little profit taking back to the mean into our zone, another further run up. So let's see if we get continuation. But let us load up, come on, all the stuff that we usually have for prep, because we have also arrived at the top of a daily squeeze. This daily squeeze now sits perfectly with that zone and the first Keltner up from the mean, right? Monday, revert to the mean, push off of the mean. We got above the daily 50. We haven't been above the daily 50 since way back on April 20th. That's the last time we were above the daily 50. Then we have broken down and stayed below it ever since. We are pulling back to that daily 50. So, as long as we can hold that, we can try to push up through this zone and through this daily squeeze top. That daily squeeze top spans from this zone around 39.60 all the way up to 40.20, and then right past that is our next zone and Keltner. So second Keltner up right by that next key zone, right around 40.60. So if we are to continue higher, we need to hold the daily 50, start to push into this daily squeeze and head up. But as we have seen many times at a daily squeeze top, we can reverse and come back down. So if we are to reverse and come back down, it'll start by losing this daily 50, which sits right at about 39.20. Then through 3,900 and back to our daily moving averages and our zone below. That was support. Being that we got through the first trend line and stopped at the next, we are still somewhat wedging until we get through this trend line that we rejected, this zone. Then we are breaking out from all trend lines from highs of year. Or, highs of year, highs of March, and so forth. So let's see today if we can hold that daily 50, try to push back up. Obviously we're having a little teensy gap down, basically flat. YM kind of leading the downside and Q leading the upside, right? And as we go through names, we'll see Big Tech was leading the charge yesterday. So as we move to NQ, and let's do the same zoom out. There we go. So if you connect the highs of year, that trend line would kind of intersect basically where the daily 200 is, way up above 14,000. But we have our trend line from the March highs, and we got through that bad boy way back like a week ago. Ran into the 50, came back down to test key levels in the trend line that we got through, tapping twice and then taking off again through the daily 50 and up to this daily squeeze. We clearly have some other highs to contend with up at that 12,600 up to 12,900, we'll call it. So we do have this consolidation to deal with as we keep trying to trudge higher to that second Keltner. And on NQ, we are at the top of a daily squeeze as well. And at that first Keltner. Man, I need to clean some of this up. But, excuse me. From our recent lows, we have a few trend lines. We were able to hold pretty much that trend line from most recent lows, slipped below it obviously, but this week came back and tested it and got back above, pushed off. We're up at these next trend lines. So let's see if we can try to hold them and push through this daily squeeze, or if we're going to start to lose them and cascade back down to our daily moving averages. They are now all stacked at that 12,050 down to 11,900. So if ES loses that daily 50, if NQ starts to lose some of these trend lines, basically losing about 12,200, we'll call it, then we can easily come right back to these moving averages to settle. Again, on NQ, note the low of week around that 860, the high around that 350, because we could just settle back. So let's see if we what we get today, if we can hold trend lines, hold that 200 level. We can try to continue higher and push into this daily squeeze top. We've got that psychological 12,500. And as we get to try to test that 12,500, we'll be starting to run into this previous consolidation that sent us down for new lows. And it looks like just outside, what is this? A 2-day, yeah. Ah! Oh, what did I just do? Come on. All right. We'll just move on. Let's drop back down to our normal time frame. So let's see if we can hold trend lines and continue to push higher into squeeze top. It spans all the way up to that 12,500. And it's very thick, so it can be hard to get through. And I know a number of folks have said, you know, why are we going higher, blah, blah, blah. We're still bearish. Yes, we should absolutely still be ready for a rejection and a rollback, but there's a clear upward sentiment. And it's not for us to decide when it's time to go back down. They could easily continue to take us higher, squeezing those shorts more and more before the next big short. So, moving on. Alrighty. Getting up to that 1800. Daily squeeze top, first Keltner. Let's see if we can get back above. Keep pushing through the squeeze top. Or if we're going to reject first Keltner, daily squeeze top, and head back to the daily 50 moving averages. Pretty simple when we have a daily squeeze like this. We will reverse and head back to the middle, or we will keep pushing, making it start stepping up thinner and thinner until it opens up. I mean, if we really want, we can take a quick look just to see any other daily squeezes. Yeah, so like back here. Back here, when we arrive at a daily squeeze, top or bottom, to open it up and fire it, we have to just keep pushing against it, and it slowly opens up and then fires. And lots of times lately, when we get something to fire, you get a quick reversal and then the continuation. Because the street's gotten wise to the whole squeeze firing, right? So, let's see if the ready can continue. If all the indices can continue to push against squeeze top to fire up, or if we're going to ultimately reject squeeze top and first Keltner up and start to head back down. YM. Everything's going to look pretty similar. Top of a daily squeeze, first Keltner up at a key level. For further upside, need to keep pushing into this daily squeeze. We could reject, head back to the daily 50 and moving averages. Apple. Apple was pretty key this week. Definitely part of the big drop, but it just went back to its daily 8. And I mean, look at how clean that is. When you talk about continuation in a bullish setting, you get a reversion to the daily 8 or 21 and then a bounce right off. And look at that hold of the 8. Even during the cash session, slipped it only a second and then took right off. And that daily 8 arrived at our 147.5 and pushed us up through 150. 150, a big key level. Let's see if it can continue to keep Apple moving higher, with the goal of getting to our next zone at 53 and 53.8, 47, 54.7. And you can see we strangely had a little 2-day squeeze that was forming in that zone, but it looks like that started to open up even. Apple no longer has a daily squeeze, it already fired. So, It's all clear ahead for Apple. She can continue to run higher without running into any higher time frame squeezes, with the goal of getting to the next zone. Third Keltner, not too far from that. So definitely something to keep an eye on. Ooh, and the daily 200 is at 158. 155 is a very key number, and not surprised to see the third Keltner there. So overall, if we get some crazy continuation on Apple, they report earnings next week. So if we get some crazy continuation and run up into their earnings, it's basically a mission to get to this third Keltner, daily 200, and a key level of 155. If market starts to roll over, it's clearly back to our key levels. Boom, boom, boom. AMD. Chips got the love on Monday before the market rolled over. So with market looking strong, we need to play what was looking strong, right? So chips, nice run up yesterday through first Keltner, now coming back to settle at it. A small daily squeeze started to pop up, but with it being small, we can just push right through it. Next up for AMD, if we can continue, we have the daily 50, the second Keltner straddling our next key level. And if we roll back, let's see if 85 can hold. If that starts to give out, back to moving averages. Amazon was a beast yesterday. And it may not look like much now that Amazon is such a cheap price, but you can see it did not even need to pull back to daily moving averages on Monday. That is relative strength, since a lot of things pulled back to certain moving averages. Looks like it tapped that 8 pre-market, and then took off, basically grinding up all day in this daily squeeze top. It's trying to hold that first Keltner up pre-market, and we've got a nice 30-minute squeeze to work with. So pretty simple when we have a 30-minute, a lower time frame squeeze while we're trying to push through a higher time frame squeeze. Let this be your gauge. If we start to break down and fire this 30-minute down, basically losing 117, then it's a good time to short it back to moving averages. If we hold 117, also kind of Monday's high, right? As long as we can hold 117 in the squeeze bottom, we can try to keep trudging higher. Looks like that second Keltner just outside of this squeeze top, up at around 122. Here we go. Here's a good example of how we're going to fire these, how we could fire these daily squeezes to the upside. We push against them and push against them, and they open up and they open up. We'll have to see on BA today. This daily squeeze might be firing, and we're at the top of a 2-day squeeze. We're already at second Keltner and third Keltner up at that 162, 163. So let's see if BA completes that journey to third Keltner, but then it's starting to get overbought. So we might, usually when we get to third Keltner, that's when we kind of take a break and come back. So BA definitely leading the way. Let's see if it can continue, or if this 2-day squeeze, 1-day squeeze combo is going to send it back down. Cat, not a lot of interest, but it is starting to break above its daily moving averages. And yesterday, obviously with the market so strong, it's going to do that. Almost back to its 21, but again, I prefer it up here. And now looks like third Keltner, well, second Keltner is already aligned with that 193, third Keltner with that 200. So even fighting back to like 200 starts to get too overbought. So not a lot of interest in CAP. They're not giving it a lot of love right now. Google, epically strong yesterday. And hopefully everyone in here can see this W just by looking at the chart and not me even talking about it. This is the stuff this is just one of the patterns that we look for. I think this is definitely the case for why some folks yesterday said Google is a great candidate for the upside. Because, you had your split, you set a low before the split, basically held that low again. So it sets up for a potential pop through the top of that W middle, right? So strong day for Google yesterday. Drifting back pre-market. As long as it can hold these moving averages, it can try to trudge higher up to that first Keltner and squeeze top. If it starts to lose these moving averages, it's back down to 110. GS, epically strong yesterday. One thing to keep an eye on when we have an earnings report. When there is a good reaction, we need to keep it on our radar. The first day after a good reaction, you usually get a little fade back or some sideways action and settling. Then you can see a day or two later, right, the continuation of that reaction. GS yesterday opened around 303, 302, that daily 50. Ran all the way to 320. So almost 20 points. That's huge for GS. Made it through first Keltner and made it up to second Keltner. So let's see if GS wants to continue. Kind of like BA, we've got that third Keltner up above at 330. Let's see if it wants to continue to there. But at that point, it's getting a little overbought, and it'll probably start taking a break. But that's okay, because they can rotate into other things. JPM just back to the mean. They went down on earnings, and now they've recovered all that. But likely, they will just continue to chop around their moving averages. As you can see yesterday with the market ripping, they just made it from one to the next, and now coming back. So not a lot of interest there. Meta was strong on Monday, pretty darn strong before getting brought back. So yesterday, not surprised to see it push all the way up to the daily 50. Coming back now, so let's see if we can hold 174, at the worst 171, although that starts to really engulf part of yesterday. I'd say more, let's see if we can hold 174 and continue this journey higher through 180 to our next Keltners above. Microsoft was a little weak yesterday, but then when it found its feet, it made a little wedge near the lows and then broke out of that wedge and played catch up with everything else. But it is at all of its daily moving averages. I think we have a 2-hour squeeze in place and what looks like a 4-hour squeeze starting to form. So Microsoft, not necessarily leading the way. So not a ton of interest there. Netflix, big old reaction to earnings through that third Keltner. Of course, now we're going to come back though, test this 2-day squeeze top. We do have this psychological 200, which is basically where we close. I don't really expect us to get all the way down there, but it's Netflix. We got up through third Keltner. Can she continue? Yeah, but I'm Personally, probably not going to touch it. Like I said, we can see it on a good reaction. The next day be a little mute. And then it could set up something nice for Thursday, Friday. So let's see if she continues to drift back, maybe to like 205, 210, 205, somewhere in there, before a continuation of that reaction. Nvidia decently strong yesterday, back over the daily 50. Let's see if the daily 50 can hold. Let's see if Monday's high can hold at about 169. Daily 50 going to be around 167.5. So let's see if those two levels could hold and send Nvidia higher through its daily squeeze top, which is getting pretty thin. We are also have that first Keltner up with the daily 50 making a zone of support. If that gives out, back to moving averages. If it can hold, on to the second Keltner and third Keltner up at 185. QQQ. Same thing. Let's see if we can hold where this Keltner is going to fall today. See if we can hold Monday's high, 296, 297, basically. As long as that zone can hold, 296, 297, we can continue higher through 300 in an effort to get to the next Keltner up at 305. And the third Keltner is up at our next key levels. Rocky Roku, weak as heck yesterday, and then all the way back. And then coming back to all of the stacked moving averages. Not a big interest here. Roku's just broken. I mean, she can make some moves, but it's always going to be an annoying, painful move, so. SPX. On SPX, we opened right at and held the daily 21 and 8. Took right off through this zone that contained us in the morning on Monday and then sent us lower. We get through that zone and you can see some wicks back to retest it before making the next push higher to our key levels above. Also made it above the daily 50. So let's see, just like ES, if SPX can stay above the daily 50, start to get push off of this zone and the first Keltner up to try to push through our squeeze top. Oh, and our next gap. So let's jump back a little bit. So our next gap to fill on SPX. Ooh, I like this. Okay. So it spans from 39.75 up to about that 40.20 again. It also spans from, kind of the top of this daily squeeze to breaking out of this daily squeeze and the next Keltner up. So if SPX can hold this zone and the daily 50, right? Basically staying above 39.20 and breaking above 39.40. Once it starts to push higher and get through 39.75, we could potentially see an acceleration through to fill that gap. That gap was set way back. What's that date? June 10th. Okay, it was over the weekend, yeah. It was an over the weekend gap down. Oh, no, gosh, I'm looking at the wrong thing. Jesus. But no, yeah, okay. June 10th. 9th into the 10th. There we go. And then we had an over the weekend gap down. So, right at that psychological 4,000, we have a gap on SPX to fill. We can get up and hit that gap in the middle of this daily squeeze and then head back down, rejecting that gap. Or we could break through into it, turn that 39.75 into support, and then push right through the gap. So definitely keep an eye on that on SPX. Spider. Just like ES and SPX, we got above this daily 50, starting to slip a hair below it. Let's see if we can get back above it. I'd say as long as we stay above 390, I'd be looking to take it long up to 395. 395.8, a huge level. For the folks that weren't here, oh, let's see, it would have been back in like April or May or something. $39 or 395.8. We slipped through it, then started pushing off of it, tore through it again, could not get to it. Now we are at it. Getting above 395. And starting to fire this daily squeeze up. That third Keltner is right up at our next big level of 410. We still have that psychological 400, so let's see if we get that continuation. But we could just as easily reject this daily squeeze top, this 395.8 big key level, and make the journey back down to our moving averages below 385. But let's see if 390 can hold and Monday's high. Pre-market, right? Alright, we'll hit Tesla and VIX and ramp this up. Tesla reports earnings today after the bell. Not going to touch it, but we saw good reaction to earnings on GS. We saw good reaction to earnings on Netflix. Let's see how the numbers come out on Tesla. But we could see a decent reaction, and we got a whole mess of levels above in the middle of this 2-day squeeze. Tesla's got a 1-day and a 2-day squeeze, and they span all the way up to our third. Is that the third Keltner up there? Yeah, they span all the way up to our third Keltner at about 830. So 780 up to 830, going to be a struggle. But if earnings are good, you never know. This thing could shoot right above 830 and press higher, but third Keltner up there makes it a little sticky. Not going to touch it today, but what could it do today? If it wants to ramp into earnings, it would be getting above 744 and 750, and then starting to push into the squeeze top, 760, and up to that 780. To the downside, if we keep rejecting 744, 718, right? We rejected 744 on Monday, down to 718. We held 718 and these moving averages yesterday, back to 744. So, we have our range, we have our levels. We'll see what happens. And I'll be interested to see, and I'll stick around for after close to see the reaction. VIX. VIX was so annoying yesterday. The whole market goes up, and VIX just goes sideways. Kind of telling us that we're at a big key inflection point on VIX. We did pre-market kind of get down to tapping that daily 200. For continued upside and to start to push through our squeeze tops on the indices, we should be seeing VIX get below this 24.5, reject down through 24 in this daily 200, and start pushing into its daily squeeze bottoms. to test this 23.3. The 2-day squeeze bottom at the next key level, 22.5. And just like the market is at its first Keltner, VIX is kind of riding its first Keltner down. So let's see if VIX can get back below 24.5 and start to push us lower so that the market can go higher. We are in a nice 30-minute squeeze here, which can help set the tone. So if we start to get above this 30-minute squeeze and break out above 25, we'll fire this 30-minute squeeze up into a 2-hour squeeze, which sits at that daily 8 at 25.5, and then through that 26 and the daily mean at 26.5. And we should always be wary around 25, because VIX this year has loved to come down to 25 as the market gets a relief pop and then sell off again, from sending VIX from 25 north of 30. So as it settles, the squeezes are going to close in. Let's see if VIX remains range bound and mute, or if it can start to push lower as the market moves higher. Should we start breaking out above 25? I'm going to be a little leery of any longs, because that's getting through yesterday. Like, we never got completely to 25, especially during the cash session. So really yesterday we should have been dumping. But as we push higher and, I don't know, the shorts pile in, you're going to see VIX act a little differently, I guess. So that's it for today. Hopefully this was helpful for anybody. Or hopefully this was helpful for everybody. Sorry. I'm seeing in the YouTube chat, is there any economic data today? Let me pull that up, because I did fail to cover that. Apologies, but I have covered it the last couple of days. So this week is pretty mute as far as economic data. Today we just have existing home sales at 10 a.m. We already had new housing starts and permits. Those are down a little bit for the second month in a row, but not a huge impact, right? The real economic data comes Thursday, jobless claims and manufacturing index, and Friday with global PMI. That's all we have on our earnings calendar, and we do still have, on our economic calendar, and we do still have some earnings this week, the main one being Tesla today after the bell. We'll know a lot more about, can we head higher and start to fire these squeezes up after that. So, thanks for tuning in, folks. Good luck today, and we'll see everybody in chat.